Friday, October 4th, 2019, Maneco 64, home of alternative economics and contrarian views. Yesterday, I didn't do a video, as I said. It was my birthday. It was a very beautiful day in Florence. It was a bit cooler. What we did was this detective game. It wasn't a treasure hunt. Basically, my wife and I met this lady from Florence, and she had a map, and we had to go and look for landmarks in Florence, and there were clues in these landmarks, little numbers that she had put by windows or shops, and we have to take that number, turn the map around, and look for the clues, and go to this other place and find the landmarks and take a selfie of ourselves with the landmark to prove that we found it. And then we went back to the little coffee place that we first met, and she was there waiting for us, and those numbers produced letters of the alphabet in a Scrabble kind of way, and then we had to find the work of art that represented those letters, and it was Ocean or Oceanos, which is a statue that's in Florence. So that's what it was. So we were actually on our own, my wife and I, looking around, and that was good. She wasn't there telling us about it. We were doing it on our own, and it took just over an hour. And then we came back to the apartment, and we decided to go for a walk. We walked to the other side of the Arno River, over the Ponte Vecchio, and then we turned left and we went up the hills behind the river. Beautiful monastery over there. There's this rose garden from which I took this picture, so you can see how beautiful Florence is. So back to the markets. Just because I didn't do a video doesn't mean I didn't watch the markets yesterday. Yes, I saw we had another set of weak data. So that was ISM non-manufacturing PMI, which is basically the service sector. That was 56.4 the previous month, was expected 55, big drop to 52.6, still above 50, but not in a good direction. And seeing that the manufacturing PMI earlier this week was below 50, around 47.8, I think. Not encouraging for the US economy. And I saw that bond yields dropped quite sharply yesterday, especially on the short end. 3-month yields dropped about 10 basis points to around 171. Looks like the markets are going for another rate cut very soon by the Fed. It looks like the insurance cuts that these last two cuts were supposed to be, according to Powell, is probably going to be the beginning of a series of rate cuts, more QE. As I said earlier this week, I think the economy is slowing down massively. There were signs all along. I know the powers that be want to ignore it, to say, oh, this time the inverted yield curve doesn't mean anything, but it has. So yeah, the 10-year yield also dropped, but not as much. It dropped about 6 basis points. So now we're almost back to 150. It closed yesterday around 153. The 2-year is at 140. So the curve is actually steeper. Does that mean everything's all right? No. The fact that yields are dropping like this is not a good sign. Today will be key, of course. We got the US jobs data, always first Friday of the month. It looks like it's expected to be 140,000 non-farm payrolls created, which isn't great, really. You'd want to see, in a healthy economy, 200,000 or more. Average hourly earnings, that is another important part of that number, is expected at 0.3%. That, of course, comes out at 8:30 a.m. New York time, which will be 2:30 Florence time. By the way, right now it's 8:42 Florence time, which is 6 hours ahead. So 2:42 a.m. Eastern Standard Time, and 7:42 London. Another thing I wanted to talk about before I go and look at the markets is that even the big investors, and in this case, it's the biggest insurance company in Europe, is starting to criticize central banks. And I think that is an ominous sign for central banks. Central banks and central bankers have been given the benefit of the doubt by big investors, fund managers, I would say, since the crisis of '08. But now I saw there's a story yesterday about the CEO of Allianz, a German insurer, which is the biggest in Europe, really criticizing Mario Draghi, making some scathing remarks directly. And I agree completely with the guy. He said it's not his place to interfere in fiscal policy and tell what governments should do in terms of spending. He even said, if you didn't keep rates this low and negative and do so much money printing, governments would behave more appropriately. They wouldn't spend as much. But I even think that Draghi doesn't even care if they spend. Draghi actually wants them to spend. I think the curtain has been pulled away to show that these central bankers have no clothes, that their policies are basically not going to work. They've never worked in the past. Mr. Draghi, in his interview with the FT, recently said Bundesbank is backward-looking central bank, that we are in a modern era. Well, Mr. Draghi, I don't think things ever change. If you print too much money, you're going to create trouble for the financial system, for government. You're going to encourage bad action. And this is what the CEO of Allianz said. So I think that's quite interesting. Yesterday, the markets were continuing to go lower after a really rough start to the week. I think the Dow was down over around 200 points. But then I think the market saw that yields were dropping sharply, and maybe there was some hope that the rate cuts that they see coming from the Fed and even QE. I think QE is back already. They can't keep the repo market going without more money printing, so they're going to have to re-inject money into the system and print more money and increase their balance sheet. Yeah, so the markets in a way said, wow, that's good, that's bullish. But I don't know how long that will last, this game. Slow economic growth and rate cuts are good for the market. There will be a point, I think, where the markets realize this is not slow economic growth. This is a massive slowdown. And then I'm not too sure the stock market will be able to keep it up. So yesterday, I saw the stock market finished up on the day, just over 100 points, the Dow. So let's see where we're now. So it's almost it's around 8:45 Florence time. Spot gold, of course, did quite well yesterday. We went up towards 1520, 25. I'm not too sure. Wasn't looking too closely. Right now we're at 1508. Up $3. Range has been 1504 to 1510. Silver is up 5 cents, 1759. Range has been 1751 to 1766. The Dow is down 15 points. S&P is down 3, and the NASDAQ 100 futures virtually unchanged. So haven't seen any follow through. We have been up as much as almost 100 points overnight. Now we're slightly lower. We saw sterling rally a little bit yesterday. We're 123.50 right now, up 0.16%. Euro is up 0.1 at 109.74, and the dollar is down 0.1 against the yen at 106.79. Dollar is 712.28 versus the yuan, so slightly weaker than a couple of days ago when I last spoke to you guys. Crude oil WTI is up 0.25%, 52.56. Brent 57.78, up a quarter. So crude oil, after that incident in Saudi Arabia, we had the spike, and now we're back to normal levels. I guess they might need another event to keep. I'm not going to say what I think the name of the event is, but you probably know. What about the bond market this morning? The 10-year yield is unchanged, around 153. The 2-year as well is at 139. The non-farm payroll is going to be key today to the markets, probably also the direction for precious metals. So it will be an interesting number to look at. I know these job data are hypothetical. It's only a survey. And the fact that almost 100 million people are not surveyed or are kept out of the, how can I say, the labor market, just goes to show that this 3.7% unemployment rate, which is expected, by the way, is not really a reflection of the labor market. If there's almost 100 million people out of the labor force who are not counted in these statistics, right? If you enjoyed this video, make sure you hit the like button. If you haven't subscribed to the channel yet, think about subscribing, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.